Well, holy smokes, everyone. It just happened today. We're seeing huge volatility in the global financial system right now. We saw a massive sell-off in stocks today, an even bigger sell-off in Bitcoin and cryptocurrencies. There's a massive risk-off sentiment in the markets right now, and there's a flood to safety of gold and silver. Investors are very, very worried because what we've been talking about on the channel that's going to happen over the past few weeks is a Japanese carry trade unwinding, and it just started to accelerate today. So you definitely cannot ignore this any longer. You need to pay attention and see why are markets tanking, why are people so worried, and what this means for your wealth. Because people, all the data, all the news, all the facts that I'm seeing pile up right now that I've been researching, everything is screaming this is going to be a repeat or could be even worse than 2008. So all those people that just simply have their head in the sand watching the football on the TV, they will have no idea what's coming. But you watching, you'll be prepared, and I'll show you exactly how you can prepare and what the big money is doing right now to hedge against this coming crisis. So everyone, this is going to be a very, very important update. This is going to be a very in-depth update. And again, I'll show you exactly how to protect yourself. So you're definitely going to want to watch until the end. So everyone, you know what time it is. Let's get straight into the news, the facts, and the data. Well, okay, first things first is this, everyone. This is what has investors so worried right now. So treasuries, aka bonds, led the global bond sell-off amid corporate supply surge. But who is really behind this? Well, let's keep reading. So high expectations that the Federal Reserve will cut interest rates again next week over the objection of several policymakers who are concerned that inflation could become entrenched above the central bank's 2% target are strengthening the headwinds. So this is the first headwind. People are worried. Why is the Federal Reserve cutting when inflation is still at record levels? Next, we need to look at this. Long-term maturity yields are driven by inflation expectations. So a lot of people, this is the Japanese carry trade I've been talking about, where they borrow Japanese debt very, very cheaply, or they used to be able to do that, and then invest it in things like US treasuries. Well, Japanese yields are starting to rise to 4%. And so the difference is not there anymore. So they're having to go ahead and sell those bonds, and they're going to have to start buying treasuries, or local investors, instead of investing in the US, are going to invest locally in Japan because they can get an attractive yield now. What this is going to cause is, even though the Federal Reserve is lowering interest rates, we're still going to see the 10-year yield rise. That's why we're seeing the 10-year still above 4%, even after these 3 Federal Reserve rate hikes. And if yields keep on going up and assets like stocks are still at all-time highs, are very, very risky, well, people will simply park their money in safer assets like bonds, gold, and silver. So also on Monday, a private sector gauge of US manufacturing unexpectedly declined and its employment component slumped, putting the brakes on the Treasury sell-off. Now, still traders are assigning an 80% probability to the Federal Reserve lowering its benchmark rate next week for a third time this year. And the Fed President Donald Trump, who's complained all year that the Federal Reserve Jerome Powell hasn't cut rates enough, Sunday said he's chosen a successor for Powell, whose term expires in May. And US markets priced in additional rate cuts for 2026 last week when the White House National Economic Council Director Kevin Hassett emerged as a frontrunner. But again, we're seeing inflation continue to surge, not just in the US, around the world. We're seeing it rise in Japan. That's why the Bank of Japan is now having to hike interest rates. And we're seeing in countries like Australia, where inflation unexpectedly surged to 3.8%. So I think a lot of people that have all their hopes that the Federal Reserve is going to be able to slash interest rates massively may all of a sudden get a rude shock. And again, if the US government continues to have high interest rates, well, that's going to be more and more of a burden on their interest payments on their debt. Because listen to this, government bonds globally were already under pressure when US trading day began, as Japan's 10-year yield jumped to the highest level, look at this, since 2008, on the prospect of a Bank of Japan interest rate hike later this month. So again, how many times do I have to make videos? And we're seeing the same number come up again, 2007, 2008, 2009. We're heading very, very quickly to the same crisis. Now, traders in US debt remain sensitive to the BOJ's policy, given its control of the spigot on the flow of Japanese yen liquidity globally. High rates in Japan may entice domestic investors to keep more funds in local government bonds instead of high-yielding assets overseas, such as treasuries. That's exactly right. So the Bank of Japan, Japanese investors, now China investors, I'll show you in a couple of articles in a moment, that China is facing its own issues. The buyers that have been there normally to buy up all the US government debt, and then the US government has been able to borrow more and more, well, they're simply not going to be there anymore. Because look at this, China factory activity contracts in its longest stretch on record as economy sinks. So the official manufacturing PMI rose to 49.2 from 49 in October, but anything below 50 is contraction. And that separates growth, and the contraction now is its 8th month. And the median estimate of economic surveyed by Bloomberg was 49.4. So we continue to see the longest contraction on record for China. But it's not just the manufacturing sector. We're also seeing news like this. China's markets rattled as Vanke revives property crisis fears. China has had a multi-year crisis. It's been going on for about 5 years now, ever since I started reporting of the Evergrande crisis, where the property developers were going bust. They were losing huge amounts of money and defaulting on all these construction loans. And, you know, real estate makes up a massive, massive amount of China's GDP. A third of its GDP is in real estate. And this is the biggest real estate market in the world. So if China's real estate market goes down, we're going to have ripple effects across the whole global economy. So we're seeing things are very, very bad in Japan and very, very bad in China. But we need to look for clues. Now, the first clue we normally get when we're going to be facing some big risk in the financial system or a huge bear market in the stock market is first we have to look at cryptocurrencies, because they're a leading indicator in my view. People that are going to sell off some of the assets, they're going to sell off some of their B or D tier assets first, like altcoins, then they'll probably sell off their Bitcoin, then they may sell off some of their risky individual stocks. The last things they'll really hold on to is maybe their index funds, their real estate, and their gold. So we won't just see stocks tank overnight. We'll first see the risk market start to sell off, like we're seeing in junk corporate bonds and like what we're seeing with crypto right now. So let's jump into this report. So look at this, everyone. Bitcoin logs its worst day since March this year. And I'll go ahead and bring up a chart. We can see here, Bitcoin has just been declining and declining. Now, I was telling people to invest when it was $30,000, $40,000, and, you know, went all the way up to $125,000 that we can see here. The peak in early October, people made massive, massive profits. You know, Bitcoin is not an asset that, you know, you really want to hold long term. You want to try to time the 4-year cycle. You'll never time it perfectly, but normally you can get a rough idea of, okay, if it's gone up 3, 4, 5 times from the low, you may want to start taking some profits. And people that think, you know, you can just hodl it forever, well, it can easily go down. I can go ahead and see some charts. It can easily go down 70%, as we can see what happened during the last bear market. So it's simply an asset that you want to accumulate here for about 12 to 18 months during the bear market. And then once you know we're getting close to the top of the bull market, you want to start taking profits. But again, even if you're not interested in Bitcoin, you have to pay attention, because this is a huge asset class now. So it said, following the recent sell-off of Bitcoin, adding that Monday's reversal has broadly been attributed to $400 million in exchange liquidations. So Bitcoin already is a very, very risky asset to invest in. You should not be playing with leverage whatsoever. I don't even recommend leverage in the stock market. Now, Monday, they highlighted that the sizable leverage across Bitcoin exchanges, which is up 200 times in some instances, with an estimated 778 billion outstanding leverage in perpetual crypto futures against some 135 billion outstanding in ETFs, you can do the math. That's right. So we're seeing huge amounts of leverage right now. People are getting liquidated and they're losing absolutely everything. So definitely never play with leverage with crypto. But like I was saying, it's not just crypto. This is more to do with macroeconomics. So macroeconomic concerns, including uncertainty over a possible US rate cut, continue to weigh on investors' minds, while nagging doubts over the overheated valuations in the AI-related names contributed to November's bumpy markets as crypto volatility is heightened. So this is exactly right. What I've been talking about is Not all stocks are overvalued, but when seeing this Mag 7 bubble, that is the high flying tech stocks, we're seeing stocks like Nvidia, Apple, Microsoft, Google, Tesla, etc. It's these 7 stocks that are holding up the stock market. Most stocks are actually down. And so big money, big hedge funds, investors, Wall Street, big banks, central banks, they all know this. And this is why they're flooding into gold and silver at record pace. Because I'll pull up this chart here. Look at this. Silver has been on an absolute parabolic run over the past year, going from around $25 to $30 all the way up to an all-time high of $58 today. We're seeing this with gold as well, surging from around $2,500 an ounce, and it hit a high of almost $4,400 an ounce and is up 60% year to date. So for all the people saying, look, this is just doom and gloom, I don't make any money following you, well, I've been trying to tell everyone that gold and silver will massively outperform the stock market, and the numbers are now proving it. A lot of you, my viewers, have invested in gold and silver or are long-term believers in gold and silver and have been telling me how much huge, massive gains you've made. And many people even saying, look, I'm able to retire now. I'm able to retire early, or I simply don't have to worry about, if I get laid off with AI that's coming. I've got a massive portfolio now that I can maybe rely on instead of trying to rely on Social Security, 401k, or here in Australia, superannuation. And this is the play that I've been doing to protect against the coming collapse that is going to be coming, because it's simple math. The US government cannot pay back its debt. There is so much debt out there in the global economy. There is so much defaults happening. A financial crisis is just around the corner. And every single crisis that's happened, has always been gold and silver that has stood the test of time. And even the mainstream media admits there's still massive room for silver to run, because did you know silver just passed what it was in 1980. It was actually lower than it was in 1980 for over 45 years. Can you tell me what asset class is at or below its price that it was 45 years ago? There is no asset on this planet that is simply at this price. Silver is the most undervalued asset on the planet right now. And with AI, with EVs, with all the investment that's going in electronics at the moment, we're going to see an absolute parabolic run. Because look at this, silver hit record highs in 2025, and here's why. They call it the devil's metal. I think that's heretical. I think it's more God's money, what he intended. Gold and silver has further to run. Now, just very, very quickly, everyone, I haven't opened my course for over 2 years. It has been locked to just my students that first enrolled in this, but I'm reopening again for Cyber Monday. I'm having an 80% discount off. When you enroll in this course, you simply just use code SILVER. That's SILVER. Use code SILVER. You'll get 80% off this course that is normally $1,000. It'll teach you everything about investing in gold, silver, and Bitcoin. Many of the students that use this course during the bear market, I actually launched this during a gold and silver bear market, have made massive returns. But I wanted to relaunch this, and I'm going to be adding new content to this course now that we are in a very, very good gold and silver bull market right now. And also, if you enroll in this course, the best thing, you'll get direct access to me. You can email me, ask me anything, and I'll respond to you directly. So go ahead, click enroll now. It'll take you to the checkout, and just simply here at the checkout, just use code SILVER. When I go ahead and loads here, use code SILVER, apply, and it'll give you that 80% discount. Okay, now back to the silver report that's going to blow your mind. So it said here, silver prices has reached a historic peak of $54.47 per troy ounce in mid-October. Now, as I'm recording this, it just hit another all-time high of $58. This is a 71% rise year on year. That's right, everyone, a 71% increase year on year, massively outperforming the stock market. They've since pared back gains somewhat, but are now growing again despite low supply levels. Now look at this. This is crazy how much demand there is. Some people are having to transport silver by plane rather on cargo ships to meet delivery demand. And like I was saying before, October was the third time in the past 50 years where silver prices peaked. Other silver price highs included January 1980, when the Hunt brothers amassed a third of the world's supply as they attempted to corner the market. As well in 2011, following the US debt ceiling crisis, when silver and gold were embraced as safe haven assets. And I think that's what's going to happen again. If interest rates don't go down, we're going to have a debt crisis with the US. People are going to lose faith in the US dollar. The reason why gold and silver is going up so much, not just because of the speculative demand, but it's because the dollar is going down. It says here, silver is only about 1/10 of the size of the gold market, and that short squeeze obviously sort of caught a few investors by surprise. So that's exactly why we're seeing price surges right now. All the shorts are getting liquidated, like all the longs in Bitcoin are getting liquidated. Unlike the previous investment waves, silver's boom in 2025 relied on a mix of low supply and high demand from India, as well as industrial needs and tariffs. After Liberation Day, the gold price spiked, but silver actually went down a little bit, and the gold-silver ratio spiked to above 100. Now, something I teach you guys in that course is, if there's ever a time when the gold to silver ratio is above 100, you want to pile into silver very, very quickly. It said the gold-silver ratio, which reflects how many ounces of silver are needed to buy an ounce of gold. A low ratio means gold is relatively cheap, while a high ratio indicates silver is undervalued and likely to rise. Now, the risk managers in financial and industrial entities did not want to let any metal go out of the States for fear that it might come back in at 35% higher, for example. So all these people that are using this for industrial purposes, they're buying it at record paces because they know the price is going to go up. Farmers don't really like banks very much, so gold and laterally silver tend to be the first point of call when they've got the harvest in. India is also the world's largest consumer of silver, with about 4,000 metric tons used every year, mostly for jewelry, utensils, and ornaments. The silver appeal this autumn also coincided with Diwali, a 5-day festival of lights celebrating prosperity and a good fortune, and also India's biggest public holiday. So what you need to know is what this is leading to is a massive supply crunch. So while gold is traditionally a favorite, this year silver is an affordable investment option in a country where about 55% of the population depends on agriculture for their livelihood. Now on October 17th, the price of silver in India rose sharply, reaching a record high of 170,415 rupees a kilo. This is an 85% rise from the start of the year. And this is where gold and silver is so good, because if the currency continues to go down, like the rupee is going down, the price goes up even faster. So it's the perfect hedge. However, 80% of India's silver supply is imported. The UAE and China are increasingly supporting that demand, but the UK is traditionally India's largest silver supplier. But you won't believe what's happening. London's vaults are going empty. So London's vaults have been emptying rapidly for the past few years. And in June 2022, the London Bullion Market Association held 31,000 metric tons of silver. By March 2025, volumes had fallen by around a third to 22,000 metric tons, its lowest point in years. So what isn't necessarily so visible to people is what's happening in the vaults, and that had reached a point where there was basically no available metal left in London. In October, the squeeze was such that traders had to pay much higher borrowing costs or lease rates to close their positions. And at one stage, to borrow overnight was costing 200% on an annualized basis, so a lot of people were very stressed, to put it mildly. And this is why they always say, if you don't hold it, you don't own it. And you always need direct access to your gold and silver. Now, over the course of the past 12 months or so, the underlying surplus has started to turn into a deficit for 3 reasons. The impact of electrification of the vehicle fleet, artificial intelligence, and photovoltaics. Because listen to this, at the moment, a standard electrical vehicle has about 25 grams of silver, and maybe the largest EVs have about 50 grams of silver as part of their components. If we moved into these solid state silver batteries, each electric vehicle might require a kilo or more of silver. And with silver having high thermal conductivity and a higher electrical conductivity than other metals, as well as increasing demand for EVs, AI, and renewables, the metal's value is likely to keep shining. So that's exactly right, everyone. There's still massive upside for gold and silver. We're going to continue to see risk in the banks, in the commercial real estate sector. We're seeing the Japanese yen carry trade unwind. China doesn't want to buy US debt anymore. US debt is getting to points where the US will be facing a default inevitably. We don't know exactly when it will happen, but it is going to happen. So again, I'm only going to be doing it for 24 more hours, and then I'll close the course again. Go ahead, click that link in the description to get that 80% off Cyber Monday sale on that gold, silver, and include Bitcoin investing course as well when you use code SILVER at checkout. But everyone, what do you think about all of this? Let me know down below. Now, for my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.